you really think about it, that was an important conversation to have. So today I want to talk to you about Fundrise versus YieldStreet versus EquityMultiple versus Origin Investments. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about real estate crowdfunding, and I want to compare and contrast four big players. We have Fundrise, YieldStreet, EquityMultiple, and Origin Investments. What is real estate crowdfunding? It's really simple. You just pull money from millions of investors and you're trying to fund a project or a venture with it. And the idea is that when enough people make small investments, it is possible to raise substantial amounts of money quickly, right? And so one of the most well-known crowdfunding sites is GoFundMe. You also have Kickstarter. But today we are talking about investment crowdfunding. We're talking about equity crowdfunding. We're talking about real estate crowdfunding. So what are the pros and cons of real estate crowdfunding, really? So you have real estate exposure, the pros. You have real estate exposure without having to own, finance, or manage properties. So that's pretty cool. Low minimum investment, so you can access assets that would be unaffordable otherwise. Higher profit potential through distribution and lump sum return at the end of the investment. That's pretty cool too. And you have automatic investing on most platforms. What are the drawbacks? It's illiquid, so your money may be tied up for, let's say, 3 to 5 years. You have a higher risk than other types of equity investments. You have higher fees depending on the platform and investment you choose, and some opportunities are only reserved for accredited investors. And basically, crowdfunding works in a very simple way. The sponsor, so you have a lot of players. So you have the sponsor. This is really the individual or company responsible for the project. So the sponsor will acquire, manage, and sell the investments, right? So you have that. And then you have the crowdfunding platform. This is the site that connects the sponsor to interested investors, and it basically deals with, it explains actually the transactions and the deals to potential investors, handles everything about regulatory, and collects money from the investors on behalf of the sponsor. And then you have the investor, in other words, you or somebody else, but the investor contributes to the project's funding in exchange for a share of the portfolio. And you can actually, if you want to start investing in real estate crowdfunding, it's pretty easy. The four platforms I'm going to talk to you today about allow individual investors to fund deals on their platforms. Of course, as long as you fulfill the conditions, you should be fine. There is a myth out there that says that commercial real estate deals are not available to individual investors, and that myth is wrong. You can definitely crowdfund in commercial real estate. It's all about the requirements, right? So real estate crowdfunding platforms give individual investors access to commercial real estate projects. Here I'm referring to hotels, apartment complexes, medical complexes, self-storage, and retail. So without crowdfunding, these large-scale investments would otherwise be unaffordable to most individuals. Let's face it, that's true. It's just a matter of monetary capability here. So if you're thinking about financing a hotel or apartment complex, unless you're a millionaire or multimillionaire or even a billionaire, you can't afford it as an individual, as a retail investor. So real estate crowdfunding allows you to participate in this wonderful monetary journeys. So you can actually make money from crowdfunding, that's for sure. There is potential to earn competitive returns in real estate crowdfunding. I'm speaking here about 2 digits, all right? We've done some research and we've seen that most experts are actually agreeing on somewhere between 11 to 15% average ROI in the last 10 years when it comes to real estate crowdfunding. And in our analysis, to be able to get into the review we are going to do today, we actually considered a variety of factors. So investment minimums, platform fees, total number of investors, total investor dividends distributed, reinvestment opportunities, the website transparency, in other words, how easy it is to find platform fees, minimums, and redemption options. We also paid attention to triple B scores, so the Better Business Bureau ratings, educational offerings that are available on the platform, and we also did a little bit of research on the company's online reputation in terms of the monthly search volume, the recent news, customer reviews, and complaints to ensure the platform is well respected and legitimate. One thing I want to say before I get into the actual review here, folks, please remember that real estate crowdfunding is considered a risky investment. Just like the stock market, there are no guaranteed returns, and you could lose your entire investment. Besides, depending on the investment, and unlike the stock market, your money may be tied up for a period of years. So this is the illiquid nature of real estate investments. It's something you have to think about twice before actually, before actually putting your cash in that kind of asset. Let's now talk about the actual review here. Let's start with Origin Investments. When you think about Origin Investments, I want you to think about a platform that allows you to invest in real estate with a personal touch. And this is pretty cool. Now, Origin Investment is a real estate investment firm that owns and operates commercial properties. And they invest in 11 of the fastest growing U.S. markets. So they are in Atlanta, in Austin, in Charlotte, North Carolina, in Chicago, in Dallas, in Phoenix, Orlando, and so on and so forth. And the company has been around for 15 years now. They've been doing deals consistently. And one thing I want to say here is that they have been actually aided lately by the regulatory environment, because thanks to the Jobs Act, which paved the way for online crowdfunding investments, there are now a number of platforms like Origin Investments that allow accredited investors to take advantage of real estate opportunities once available only to institutions. And many of these platforms are first and foremost technology companies, including Origin Investments. And some real estate investors have found their due diligence and offerings lacking. I'll speak about that. The cool thing about Origin Investments is that they've done a fantastic job at actually structuring their business model, not only to benefit the investors, but also to benefit the potential sponsors they're working with. And we love the fact that Origin Investments they have a strong bench in terms of expertise. If you think about the two co-founders, David Scherer and Michael Episcopi, they use Origin as their primary investment vehicle. This is really unique to Origin's crowdfunding business model because they are the largest investors at Origins with over $56 million, $56 to $60 million committed alongside investors, ensuring alignment of interest. And this is something we really love. And the team's compensation at Origin is based largely on fund performance, not acquisition value. So as an investor, this is something that you would really be happy about. And one thing we also love with Origin Investments is that, again, when you look at their value chain, when you look at how they deal with borrowers, with investors, and the whole regulatory environment, they have a process that is pretty efficient in terms of distributions, in terms of due diligence, in terms of customer service, and in terms of managing their investing fees to make sure they are as competitive as possible. So how does Origin Investments work? Technology can be a wonderful thing, and the process of investing in real estate deals like, this used to be, if you really think about it, back in the days, 20, 30 years ago, it used to be time intensive and paperwork intensive, right? On Origin's crowdfunding platform, there are 3 investing steps. You register, so you need to be an accredited investor to invest, but anyone can register and review the funds. You need to research, and then you invest. So register, research, and invest. So everything you need to know about the strategy and specifics of each fund is available for you to view and download. And it's very easy to compare investment choices against each other thanks to smart technology. Again, when you think about Origin Investments, I want you to think about a fintech that is combining superbly the brilliance of technology to the brilliance of investments. So once you register and research, you start investing. So Origin has intentionally put an emphasis on personal assistance because the company wants you to get to know you as an investor and help you understand exactly what you're investing in. So you are assigned a personal contact to work you through the investment process. You are working not with a customer service rep, but with a knowledgeable member of the team who is also familiar with all aspects of the properties and the processes. That's fantastic. Think about that. And so you now let's talk about the pros and cons of Origin Investments. So Origin has substantial skin in the game. Like I said, the two co-founders are aligned in the investments they're in. You have team expertise. You have institutional quality properties available to the crowd. So Origin was in business long before the Jobs Act made crowdfunding available. So they have actually recreated the same high quality processes valued and depending upon by high net worth and institutional investors in a platform with crowdfunding technology. You have also transparency and online efficiency. That's wonderful. Diversification is great. So within each fund at Origin Investments, there are dozens of properties located throughout the target markets and no risk of additional capital needs. So you will never be asked to contribute additional capital to keep the projects afloat. What about the cons? You have high minimum investments, right? This is kind of high. So the Origin Income Plus Fund has a minimum of $100,000, and the QUZ fund has a minimum investment of $50,000. So this is something to actually keep in mind. And one thing I also want to say here is that another drawback is that you have the number of deals. So the pipeline is kind of dry, I would say, at Origin Investments because they have set the bar high, and that's really to their advantage. And finding deals that really fit into their investment, I would say, conditions is becoming hard and hard. But they are working on it, and the team is constantly trying to find new deals. And I'm sure they will actually expand their pipeline very soon. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a conversation about real estate crowdfunding, and we just review Origin Investments. Let's talk now about EquityMultiple. When you think about EquityMultiple, I want you to think about commercial real estate crowdfunding, right? So if you're not much of a risk taker, please do not invest in EquityMultiple because, again, here is a company that has understood and that has structured the whole real estate crowdfunding process very, very well. And of course, the minimum investment for EquityMultiple is $10,000. And the funder is a Charles Clinton. This guy was a real estate lawyer working with big private equity clients like Blackstone and KKR prior to launching EquityMultiple. So you have some kind of expertise there. You have the breadth and depth of expertise here. And one thing I also love is that he and his co-founder, Marius Sulzen, who, by the way, happens to be an expert also in the field. He was a 10-year veteran of the real estate private equity industry. So EquityMultiple may be the only commercial real estate investing crowdfunding platform backed by a leading national real estate capital markets firm, Mission Capital Advisors. Again, so you kind of have the depth there and the breadth of expertise, right? And what we love here is with the EquityMultiple is that they have been the ideal partners with insights in terms of strategy, not only for borrowers, for sponsors, but also for investors. And the way EquityMultiple works is very simple. They focus on institutional commercial real estate, and they offer a large range of opportunities across the country from experienced lenders and sponsors, from debt deals. Management works only with experienced lenders rather than operating as a lender itself. That's for debt deals. And then you have equity deals. For equity deals, EquityMultiple's primary compensation is a 10% participation in project profits, which the company receives only after the full initial investment has been returned to all investors. Okay, so their cut is 10% once you get your money back. And EquityMultiple's target minimum is currently around $500,000 per deal, although it has done deals as large as $6 million or $10 million in the past. And they're always trying to get they are pursuing an ROI of 8 to 20%. So that's the sweet spot for them right now. And if you want to invest with EquityMultiple, This is very simple. You first have to register for the platform. You will need to browse the live offerings. You need to review investment details and choose a deal that fits your investment objectives and also your risk profile. Very important. Are you risk averse? Are you a risk taker? Right? Are you somewhere in between? You need to complete your account setup and link your bank account to fund investment choices and receive distributions. And you need to complete the investment checkout process. So your e-sign documents, you need to verify your accreditation and fund your investment. So once you are invested, you can monitor your investment performance on the portfolio page. You can receive a regular asset management on all your investments through, they have a feature called the My Activity feed. You can receive earnings directly through ACH bank transfer, and you can view quarterly investor updates on asset performance. All right. So keep in mind, before you actually jump into equity multiples on the equity multiples bandwagon, their niche is very clear. They focus on opportunities projected to deliver attractive, risk-adjusted returns for investors, all kinds of investors. And their strategy is to look for commercial properties in thriving markets with current cash flow, short-term senior loans with robust APR to investors and a promising exit strategy, and value-add projects with construction components and more aggressive business plans. One thing we have seen with Equity Multiples team is that they're constantly looking for, they look for the value add, they look for the LTV, the loan to value, and they always pay attention to the internal rate of return, the IRR, on both deals. And they have a strong screening process also. What about the pros and cons of Equity Multiple? So the pros, you have institutional quality deals, 24/7 customer service, you have high upside potential, and Mission Capital's backing. Again, the company's relationship with Mission Capital, an experienced and well-connected real estate advisory firm, gives Equity Multiple a powerful and well-financed partner. And this is not negligible. This is very important. And another benefit here is that you have super detailed offering pages that gives you a plethora of details on each investment, opportunities, and risks and rewards. What about the cons? All investors must be accredited, which, might keep some investors away. They have a high minimum, so $10,000, and they have less deal flow. Let's now talk about Fundrise. Fundrise is a well-known player in the field, and we have reviewed them on other shows, and they've been around for a while. They are one of the pioneers of online real estate crowdfunding, and the company has been around since 2010. And if you want to invest in commercial real estate passively, and the keyword here is passively, if you want to really do that, then go with Fundrise. It's one of the highest rated crowdfunding platforms on our show. And in 2015, Fundrise shook the crowdfunding space with the introduction of its first E-REIT. And E-REIT is short for Electronic Real Estate Investment Trust. This is really an invention by Fundrise to make investing in commercial real estate accessible to the masses. And if you really think about it, E-REITs are similar to investing in an ETF or mutual fund. And the big advantage of REITs is that you're pulling the funds of many individual investors. So the REITs ultimately can purchase a diversified mix of commercial properties. Here I'm referring to office buildings, shopping centers, hotels, and apartments. And that diversified mix is important. It's kind of cool because the typical retail investor would not otherwise be able to purchase individually. And one thing you have to understand here is that people always ask the question, is Fundrise legit and safe? And our answer after extensive research is yes on both questions. Very few investments can be considered truly safe, that is with a guaranteed return. However, less liquid real estate investments tend to give better protection from downturns in the broader market than securities such as stocks and mutual funds. And the Fundrise's portfolios of E-REITs and E-funds are about as safe as you can find in the real estate space. So this is something you have to think about. And what we love here is that Fundrise has very low minimum requirements to invest. Right now, at the date of this show, the minimum is only $500, and the company accepts non-accredited investors, so that's really good. And the cool thing here is that if you have more cash, if you want to invest, let's say $1,000, you can be upgraded to a core portfolio. So your portfolio, so you have the starter portfolio. The starter portfolio will actually you need to invest $500, but the core portfolio you can invest 1,000, and with that you can actually have supplemental income, balanced investing, and long-term growth. And Fundrise really works in a very simple way. So when you sign up for Fundrise, you will either invest in the low minimum starter portfolio that I just spoke about, or in one of the 3 core portfolio plans: the supplemental income, the balanced investing, and the long-term growth. Whichever one you pick, your money will be invested in some kind of allocated assortment of E-REITs and E-funds, and those two will consist of private real estate assets located across the United States. And Fundrise will actually, they do something very cool that we love, and we see this in our research time and again. They will tailor your specific allocation based on your personal investment needs. And although your results may vary according to your plan, you can expect to receive payouts in 2 ways: quarterly dividend distributions, that's number 1, or appreciation in asset value at the end of the asset's investment term. Keep in mind, though, folks, that Fundrise's portfolio are meant to be long-term in nature, so that it won't happen overnight. The returns I'm referring to here, and one thing you need to also know is that the returns I'm referring to cannot be guaranteed. Okay, and but Fundrise in the last 10 years has performed fantastically, really. Whether you are choosing their starter portfolio or the core portfolios, so you have the supplemental income. The goal of that portfolio is to generate income. You have balanced investing, that is for income and growth, and the long-term growth portfolio is just for growth. What are the pros and cons of Fundrise? So pros: you have low minimums, low fees, no accreditation required. You have diversification, 90-day purchase guarantee. You have commercial real estate access, passive investments, and you have quarterly redemptions and distributions. Speaking of redemptions and distributions, if you want to redeem your shares from your Fundrise portfolio, you'll need to first submit a redemption request. You can do this simply by going into your account, and you go to the settings, and what you have to do is you just place the request. And after a 60-day waiting period, you may obtain liquidity every month. Keep in mind, however, that your redemption value may be subject to a penalty of up to 3%. What are the cons of Fundrise? You have investment liquidity. So Fundrise's E-REITs are not publicly traded, right? So they are illiquid by nature. And the tax consequences also. Distributions are taxed as ordinary income, as opposed to the 15% tax rate on qualified dividends. I want to speak to you now, folks, about YieldStreet. And when you think about YieldStreet, you're thinking about high yield opportunities for individual investors. And YieldStreet is run by a brilliant man, really brilliant, Milind Mehiri. This guy, he's been around for a while, and he's done a fantastic job at YieldStreet. Actually, the whole idea of YieldStreet came to the CEO Milind Mehiri when he found himself frustrated by the lack of investment opportunities outside the stock market. And having already founded Yodel, an SMB marketing company, Mehiri created YieldStreet to give individual investors access to high-yield asset-based alternative investments. So here we are referring to not just real estate, but also asset-based in general. It doesn't have to be only real estate. And traditionally, if you've been around for a while, you know that these types of asset-based investments have been available traditionally only to the super wealthy. So YieldStreet allows accredited investors to take advantage of asset-based opportunities. So it actually opens up borrowing and investing options previously available to the institutional investors. One thing I want to say here also is that when you think about YieldStreet, think about a platform that connects investors with alternative investments across asset classes such as litigation finance, real estate, commercial finance, and consumer finance. And preset, they also love their core. I wouldn't say their core, but let's say 20%, 15 to 20% of their business model right now is focused on something called pre-settlement financing. This is a form of litigation finance that provides advances to meet the cost of living needs of plaintiffs while their cases are litigated. And litigation finance is one of the most overlooked asset class, especially when it comes to alternative investing, and the one most commonly featured on the YieldStreet platform. All right, so those are the kind of stuff that you have to know about it, and you have to know about the business model at YieldStreet. And the account actually is free to open. They perform excellent due diligence. Their ROI is between 8% to 20%. That's the annual ROI, assuming that you hold the account open for 1 to 3 years. The fees are around 2%, and the payout frequency depends upon the deal that you're in, but it's usually around monthly. It can happen monthly or quarterly. And the cool thing here is that there is not a direct stock market correlation here, because think about it, tangible collateral backs the deals. So those asset-based lending deals, they hold very low correlation to the stock market, which, if you really think about it, protects your portfolio from market volatility. And you also have transparency. We love the transparency on YieldStreet in terms of fees, in terms of funds, in terms of cost, in terms of the deals they're working on. What are the pros and cons of YieldStreet? Should you consider this investment? Now, the pros, you have low minimums. So with a typical $5,000 per offering minimum, you can really consider investing in several deals and diversify your holdings. This is pretty cool. Possible higher returns. I spoke to you earlier about the average ROI being around 8 to 20%. This is really good. I mean, 2 digits right now in this environment, in this economic environment, I would take it anytime. So with another benefits is alternative investments. So borrowers with non-traditional funding needs meet investors who want to invest in high-yield investments they would not otherwise have access to. And the loans are secured by collateral, so all of YieldStreet's offerings are backed by asset-based collateral. You have a low correlation, I just spoke about that. You have a low-cost model here because crowdfunding occurs via an online marketplace, so the costs tend to be lower than those involving a traditional bank or a financial institution. You have a pre-funded opportunity. So when you invest in a pre-funded fund offering, you begin to earn interest immediately after your investment is completed. And the YieldStreet team does a great job at presenting you vetted investments. So less than 10% of opportunities reviewed by YieldStreet are actually approved and accepted on the platform. Think about that. That's fantastic. It means that they have raised the bar for excellence. They have raised the bar for alignments with their investment model. They've raised that bar very high. So it's all beneficial to you, the investor. You also have transparency, and you have a reduced default risk because all YieldStreet's opportunities are asset-based. The risk is less than non-collateral based loans, right? And to date, based on our research, YieldStreet has had $0 of principal loss. What about the cons? So you have the default risk, so payments are not guaranteed and may be subject to delay or total loss. Accredited investors only, so you must be an accredited investor, and YieldStreet will verify that you meet the minimum requirement before allowing you to invest. There is no secondary market, so once you invest, your money is tied up for the duration of the specific investments. There is no secondary market to cash out. And you also have some untested investments. So the crowdfunding component has been in existence for only several years and is untested over the long term. So folks, in today's conversation, I was comparing and contrasting 4 big players. We have Origin Investments, we have EquityMultiple, Fundrise, and YieldStreet. The question is, which one should you choose? And this is the $1 million question, right? Now, I would say it really depends. I'm showing you right now on the screen, we have done a comparative table of the 4 players here, of the 4 business models, and I want you to pay attention. Please take a look. This comparative table will answer your question as to which service you should go for. Let's start with Fundrise. Fundrise, they accept all kinds of investors. So even if you're not an accredited investor, you can invest with Fundrise. The time commitment is 0 months, so there's no time commitment. Minimum investment $500. They are serving their deals cover the whole United States. The offering types, you have debt, equity, and preferred equity. They will charge you 1% per year in terms of their account fees. And property types, here you have some kind of diversification also, because they not only they cover commercial, residential, and single family. If you think about Origin Investments, you have you need to be accredited, and they will verify that. You need to be ready to actually leave your money in an investment account for 5 years. Minimum investments can be a deterrent for some people. $50,000. The regions served right now are a little limited, so they are in Georgia, Texas, North Carolina, Illinois, especially around Chicago. They are in Denver, Colorado. They are in Tennessee, Nashville, Tennessee. They are in Florida, Orlando, and they are in Arkansas. In terms of offering types, equity and preferred equity, account fees 1.25% per year. Property types, commercial and residential. And of course, they have a private REIT. When you think about equity multiple, the question you have to ask yourself is, are you willing to leave your money in an account for 12 months? Because that's the minimum time commitment. You gotta have $10,000 minimum. They serve all the 50 states. They offer debt, equity, and preferred equity assets. And the account fees, this is zero. It actually oscillates between 0.5 to 1.5% annually, plus 10% of all profits upon exit. And the property types here, we are referring to commercial property. And then you have YieldStreet. YieldStreet, you got to commit 1 to 3 years, minimum investments, $5,000. They cover the whole United States. And the offering types here, you have secured notes and account fees, 2% per year, depending on the deal. And here, the property types, commercial, residential. But again, remember that YieldStreet, you have this is an asset based, so they are in commercial real estate, they are in litigation finance, they are in all kinds of alternative investments. So, having said that, our pick, after comparing Fundrise, YieldStreet to EquityMultiple and Origin Investment, our pick is Fundrise. We have scored this company 10 over 10. They believe in our view, epitomize the kind of real estate crowdfunding you need that is open to the masses. They accept non-accredited investors. They actually have a minimum investment that is, I would say, accessible to the masses, $500, and they are covering all the 50 states in the union. So that's fantastic. Thank you so much for your attention. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.